I use a strategy every day and it gives me consistent profits like this, this, and this. Even a complete newbie could literally not go wrong with the strategy because it is so simple. In this video, I'm going to show you exactly how my strategy works, and then I'm also going over all my trades in October to show you how I executed them in order to get my 100% win rate. There are some trades that I executed live on YouTube and in my Discord. The charts look clean, there is nothing on it because my strategy is literally so simple. And before you say, yeah, well, it's easy to fake all these results, here are my students who literally learned my strategy and copied all of them. All the results are from them. They took their own trades because they mastered my strategy. As you can see, everyone just super transparent with all their trades. So guys, the strategy literally works. It is super easy. Alright guys, so let's now go into TradingView, the place where the magic happens every day, where I do my shit. But before that, I would like to say, guys, please focus on one strategy. The main thing that everyone fucks up is because they always combine way too much strategies. The 53 concepts that you see on YouTube from everyone, they are not gonna work, okay? TGR has a strat, PB has a strat, I have my strat, but they don't work combined, okay? Everyone has their own stuff that they do before trading and it's not working when you combine all of them. Why? Because you are looking at too many things. Every strat is super simple, okay? This, that's it. Don't combine all of them. Don't start looking for weird indicators that will make you profitable, okay? It is not gonna work. Master one strategy, take it to the next level. That's it. Let's now go into the fucking charts, man. Let's go. So, my strategy literally consists of 4 simple things. What I would like to see is an SMT. I then would like to see an inverse value gap. I would like to see a CISE. And then the last thing that's not really part of my entry model, but I do look at is market structure. Market structure. So super important. I will go over this at the end of the video. Let's first start out with the 3 things above. And yes, only these 3. That's literally my strategy: an SMT, an inverse value gap, and a CISE. That's how easy it is. Literally, if an 8-year-old put his head into an SMT, an inverse value gap, and a CISE, he could literally make profits with this. So I'll go over everything as a different step. Our first step, like I said, is our SMT. What is an SMT? Super simple. Nasdaq and S&P move correlated, and you would like to see one of them break a low and the other one not to break that same exact low. So for example, if this is Nasdaq and this is S&P, we could see that there is an SMT right here. Why? Because Nasdaq broke this low and S&P didn't. This is literally everything I need to see before entering my position, before there even is a setup. So the first step, SMT, one pair breaks it, the other one doesn't. I mostly like it when Nasdaq is the one that breaks the pair. Don't know why, I just like it way more when Nasdaq does it. Like I said, guys, it's so simple. I don't even know 70% of why my strategy works. I just know how it works. So this is the first step. The next step that needs to happen is when I go over to the lower time frame. Step 2. I need to see an inverse value gap and a CISE. The CISE is the main thing. The inverse value gap is mostly a bonus. So to keep it simple, I go over to the 1 minute, the 2 minute, or the 3 minute, not higher than that. And I look for an inverse value gap or a CISE. It doesn't really matter on what time frame the CISE is or the inverse value gap. You can have a 2 minute inverse value gap and a 1 minute CISE. It doesn't really matter if the time frame doesn't match. Now, what is a CISE? A CISE is just a candle close above your last high that created your last low. Alright, so above your last high that created your last low. Okay, so this is the last high. After that, we created another low. We need to see a candle close above this level, and this is our CISD, okay? Even a little kid could figure this out on his own. Now, in between, this is what I'm talking about, in between, I would like to see an inverse value gap. Now, what is an inverse value gap? Kinda the same thing. This means that in here, we do have a fair value gap. Probably all of you know what a fair value gap is. If not, sorry guys, I'm not going super deep into that. You can watch other videos on that. And then probably my entry would just look like this. So we have an SMT, let's say like this. We have our inverse value gap on either the 1 minute, 2 minute, or the 3 minute. We then have a CISE on either the 1 minute, the 2 minute, or the 3 minute. That's it. That's everything I need to know before entering. Next thing is my stop loss, my break even, and my take profit. So my stop loss will always be below the last low. So this is the last low. I'm not putting it below the fair value gap or somewhere in between, always the last low. And my take profit, super simple, always a 1-to-1 risk reward. Why? Guys, this works. I have tested 1 to 3, I have tested 1 to 1.5. I don't care, the 1-to-1 works best for me. Even with a 1.2 or a 1.3, I just keep hitting break even, or he just reverses completely. Even because Nasdaq is so bullish, you can take clean shorts just because you only need a 1 risk reward. We need a super small move. That's everything that I would like to see in the market. If market is choppy, I will move my stop loss to break even at either a fair value gap. So let's say maybe there is an internal fair value gap. So maybe there is a fair value gap right here, then I'll put my stop loss to break even once we reach it. Or if there's not a fair value gap, I will probably do it when we reach an internal high like this on either 1 minute, 2 minute, 3 minute, 4 minute, 5 minute. Okay, I never go above the 5 minute. Keep that in mind. So stop loss to break even at a fair value gap or at an internal high. That's it. That's it. It's not it, because I said there are 4 things. Market structure. Let's go over market structure, why market structure is super important. So, 4-step market structure. Market structure. Why is market structure so important? Guys, if we are looking like this, I am not going to buy, okay? In a market that just has this super strong candles down, I am not interested in any buys. Even if the SMT is super clean, even if there is an inverse value gap, even if there is a CISE, if we are super bearish, I am staying off the market. This is a concept that comes with time. You can't really learn this. You need to know how to read the market, how to feel market structure. I can't really explain this. I will show you guys in my trades in the next minutes how I read market structure and why I did enter or why I would skip this trade. I can't really go too deep in this because, like I said, it's just a feeling that comes with experience and time. But there is one simple thing that I would like to see before entering, and that's based on market structure, and that is a V shape. So once we have our SMT, I want a super strong rejection on it. And why do I call it a V shape? Because I literally want market to look like this. Most of the times price either bounces over SMT like this, or of course when it's a bearish SMT, why am I doing this? When it's a bearish SMT, we bounce off it like this. So V-shaped market structure helps me a lot. I will show you guys the real life examples because it's difficult to show you. Let's now go over all the trades that I took in October. And guys, don't forget, I uploaded every trade recap on YouTube. So if you're curious for the live executions, you can also check it out in my other videos. Alright guys, so our first trade example, my first trade that I took this month was on 7 October at 10 AM. I am here in my replay and I already see exactly what happened. So I remember that Nasdaq broke this low and that S&P didn't. I then go over to the 1 hour time frame, to the 1 minute time frame, and I look for a sign of rejection. And as you guys can see, what did I say? It looks exactly like a V shape. What happened after? We get our CISE right here, we have our inversion right here, we closed above it, I entered, what happened? Stop loss below the low, bada boom, bada boom, bada boom, here we go, full take profits. It's so simple, oh my, it's so clean, man. SMT, inversion, CISE, entry, 1-to-1, bang! Next, let's go to the next trade. So, second trade of the month that I took, we are already at 15 October. I am super good at filtering my trades. I only take the best setups. Let's go over it. We had an SMT with this high. Nasdaq broke it. S&P stayed below it. So we have an SMT. What do I do next? Went over to the 1 minute time frame. What can you see on a 1 minute time frame? Oh, Deze. Again, guys, this V shape, bada boom, immediately a super clean rejection. What do we also see? Oh, a fair value gap, inversed, another fair value gap, inversed. Then on the 2 minute we could see no fair value gap, on a 3 minute we could see no fair value gap, but 3 minute CISE, super clean, 3 minute CISE, this is your last low. Before we created a new high, we need to close below it. As you can see, close below, bada boom, enter, and full take profit. And guys, look at this. So we hit our 1-to-1, perfect 1-to-1. As you can see, price hit stop loss after. Imagine going for a 1-to-3, you would have been stopped out. 1-to-1 with the strategy, 100% win rate. Let's go to the next trade. Alright guys, third trade of the month. We are already at 23 of October. This one was a little bit before market open, so I was super cautious with my risk. Let's go over it. So again, we had an SMT with this low, Nasdaq swept it, S&P didn't. I then go over to the 1 minute time frame. Again, what had we see immediately after we had the SMT? So V-shape, super clean. V-shape in combination with inverse fair value gap with CISD. Why didn't I enter here? Because for me it was too high and I put a limit on my CISD level, so I entered right there. What do I target? A simple 1-to-1. Like I said, cautious because this was a little bit before market open. So like I said, I go break even at some internals highs. I went break even at this high. As you can see, we swept it. We hit break even literally 2 minutes later. $0 made, don't really care, didn't lose my position, so I'm super happy about that. This trade is also fully recorded on YouTube. If you want to see the live recording, go check it out. Let's go further to the next trade. Right guys, so the next day we took another position. We had an SMT with this 8 AM low. Again, go over to the 1 minute time frame. What can we see on the 1 minute time frame? Oh mate, so clean. So we had again V-shape, we swept it. Immediately the V-shape. Where is my CISD? My CISD was kinda high right here. Bada boom. In between we had this 1 minute inversion and there was not another one. Maybe there was a lower time frame CISD 2 minutes, for example. Yes, the 2 minutes. So I probably entered after this 2 minute. Stop loss below the low. Take profit at a 1-to-1. What do we see? 1-to-1. Yeah. Perfectly executed. Again, I recorded this live. You can see this all in my trade recaps uploaded on YouTube. Super simple, super clean. It's literally always the same thing. SMT, V-shape, inversion, CISD, take profit. Let's go to the next example. Alright guys, so the next and the last example, another super clean trade. This was on the last day of this was on 30 October, so not the last day. So what can we see? We had an SMT with this previous hourly candle. It is a super small one, but SMT is SMT. Nasdaq broke this high and S&P didn't. I then go over to the 1 minute time frame. What do we see? My man. So again, this V-shape after this sweep, we go up, para boom, we immediately drop. What do we have next? Whoa, what do we have next? We have our 1 minute inversion, we have our 1 minute CISD. Para boom, where do we enter? Yes, on the limit. Stop loss above the high, take profit. Take profit, a simple 1-to-1 risk reward ratio and TP. Guys, it is so simple. If you have any questions, please let me know. Bro, how can you have any questions? SMT, inverse fair gap, V-shape, CISD. I showed you all my trades right here super quickly. I can't say anything else about them. I will go quickly over the market structure like I said before, but in this trades, market structure was always super clean. I will now show an example of yesterday or 2 days ago where I did close my trade earlier because of market structure. So it was indeed yesterday at 10 AM. We had an SMT with this candle. S&P broke these lows and Nasdaq didn't. On the 1 minute time frame, we had super clean price action. You could say I didn't really like it, but wait, I think it was right here. We had an inversion right here. We had our CISD right here. So at this time I entered right there, and to be honest, everything was super clean. Right here, everything was still okay. But in the trade, some stuff. Oh no, wait, I entered somewhere else. I chose the 2 minute, I think. Yes, I chose the 2 minute CISD like this because it was way cleaner and nicer. Yes, I remember. So 2 minute CISD, my stop loss was below this low, so I entered right here. And then to be honest, still everything was alright. This chop happens, you go and draw down, doesn't really matter. But this candle, bro, I don't want to see this happening in my trade. The sell pressure was insane. I will show you guys now a small recording of how fast the candle flipped. So we were going to the upside, and then like literally in 5 seconds we completely flipped the candle and went all the way better. I don't like when this happens. There was too much sell pressure in this position and I just want to be out if I could. I decided I will close at break even because I don't want to be in positions like this. These candles just show there is a lot of sell pressure, and you know, I like to preserve my capital. I don't like it. However, we do still hit TP. Doesn't really matter. When stuff like this happens, I read this and it gives me a bad sign and I want to be out of the trade. My edge, literally guys, my edge in the market is to filter out as much trades as I can. I hate taking trades. Trust me, I hate taking trades. I don't want to do it. So that's why I literally only took 5 trades last month. It's because I don't want to trade and I only take the best setups there are. Like I said before, market structure, reading market structure comes with time. If you see a candle like this and you don't know anything about trading, you will think, oh yeah, it's fine. No, it's not. I've had some comments about this, like, yeah, you're too emotional, you close way too earlier just because you're in drawdown. Well, fuck you, I don't really care what you have to say. I have 100% win rate. And you don't, so that's anything I wanted to say about that. I am not letting anyone in my head because I need to keep doing what I am doing. Alright guys, so I think I covered everything, but if you don't believe me, if you don't think anything I said was real, just hop in my Discord, ask my students if I fake anything, if I take positions that I don't share. I don't care, just ask them, you will see it's all real. I am a super transparent trader. I want to be the only transparent guy on social media because I feel there's a lack of that in this scene. Thank you guys for watching. If you have any questions, make sure to ask and subscribe and like. Thank you. Bye bye.